morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, earnings season is once again upon us, and today we're taking a look at one of the stalwarts in the non-banking finance sector. We're talking, of course, about Guardian Holdings Limited for its 9-month fiscal period ended September 30th. Now, there was a little dip in the group's earnings when compared to the prior comparable period, but generally, there's a more optimistic tone going forward for the group, particularly with buoyant financial markets. Let's take a look at how they would have performed and consider what investors might be looking forward to in the few quarters ahead. Turning quickly to that Guardian Holdings story, of course, the group would have recorded earnings per share of $1.97, which was a 5.7% decline from the $2.09 recorded in that prior comparable period, of course, the 9 months of 2020. Now, the big news was that net income from insurance activities had a fairly substantive decline of around 37% from $998 million in that 2020 comparable period to $630 million in the most recently concluded period. However, from other areas, overall net income from all activities would have increased by 17.6% from $1.68 billion to $1.98 billion. Overall, there was also an increase in operating expenses from $922 to just over $1.08 billion, and that profit before tax fell from $647 to $608 million, and profits attributable to equity holders would have also declined from $485 million to just around $457 million. So some decline in earnings, but there was some notable one-off type expenses. When we take a look again at that historical trend in net income by activity, well, we can see, as mentioned, that those net income from insurance activities declining from $998 to $630 million. A couple notable features which were mentioned or raised by the group in their report, among them being higher claims, particularly in the Jamaica jurisdiction, life insurance claims, and that would be arising from mortality related to COVID-19. And so certainly if the group or if the region does not get a grip of that COVID-19 situation, this may be a feature in subsequent quarters, not just for GHL, but for other insurers as well. Also mentioned by the group was an increase, or weaker persistency ratios, given the economic hardships, particularly in the Trinidad and Tobago economic jurisdiction, as noted by the group. There would have been some lapses in insurance policies leading to a weaker metric in terms of persistency. And there was also, quite surprisingly, the most a one-off loss from a reinsurance business out of their Bermuda-based subsidiary. It related to a one-off $10 million loss coming from insurance claims related to floods in, of all places, Germany. And certainly with COP26 on the mind and climate change on the mind, that will be a trend or a feature that investors will be looking forward to or looking keenly on at, given that climate change is having fairly significant impacts, not just to real-world events, but also having a financial impact, as would have been seen in the results of GHL in its most recently concluded financial period. Now, one of the big news items related to the group was its cross-listing on the Jamaican Stock Exchange earlier this year, in May to be exact, and that was met with quite a lot of fanfare. And when we take a look at how the price of Guardian Holdings has trended on the Trinidad and Tobago Stock Exchange in blue versus the Jamaican Stock Exchange in that golden color, we can see that it has been somewhat erratic. After debuting on the Jamaican Stock Exchange at a pretty comparable price to the Trinidad and Tobago Stock Exchange at around that $25.50 level, the price in Jamaica would have shot up to the equivalent of just under $43 in Jamaica, and very steadily declined since then to that equivalent in TT dollars of around $22.60 compared to the Trinidad and Tobago Stock Exchange price of $30.51. So the stock price would have certainly popped, as would have been mentioned in some quarters on the Jamaican market, but it may have been fizzling out for a couple months now, given the observed price performance on the Jamaican Stock Exchange relative to the Trinidad and Tobago Stock Exchange. Of somewhat comfort, I suppose. That might be very consistent with the trends of cross-listed stocks, which typically trade at current levels between a 25 to 30% discount on the Jamaican market relative to the Trinidad and Tobago market, as has been the observed case with other cross-listed stocks such as Grace Kennedy, NCBJ, GMMB, to name a few. So on the basis of buoyant financial markets, which have certainly helped to keep the earnings profile of the GHL or the Guardian Group up, but on that basis of higher claims, weaker persistency, and the overlying context of economic uncertainty, Bourse is going to maintain a neutral rating on Guardian Holdings for the time being, which trades at a price-to-earnings ratio of 9.5 times compared to that sector average of 11.7 times, and offers investors a dividend yield of 0.6% compared to the 1.1% sector average. That's it for this week's edition. For more information, of course, you can give us a call at 226-8773, email us at invest@boursefinancial.com, and check out our website where all of our research is absolutely free at bourseinvestment.com. And of course, you can catch us in the business section of today's Bigger, Better Trinidad and Tobago Guardian newspaper. Stay safe, get vaccinated, and see you next week on the Bourse Report.